In today's video, we'll talk about everything to do with what Jerome Powell just said about the markets and why now a March rate cut is off the horizon and May is now on the cards. And of course, whether this is too little, too late in terms of what the market's expectations are. Could this trigger a big sell with Apple, Amazon, and Meta earnings along with jobs numbers still to come this week? And is this coming to fruition? Tech earnings and FOMC being the topping of markets, which we've seen 2 times now over the last 12 months. Hello, ladies and gentlemen, and welcome back to The Daily Show, where we discuss stocks, commodities, and cryptos together. We'll be covering that and more in today's video, including the sell-off that may have just begun on the S&P, and of course, something a little bit worrying in terms of semiconductors, and of course, Qs joining in with an island reversal over the last 24 hours. It's the first time we've seen this in a little while, and guess what? It looks like CTAs could be involved. Let's discuss together right now. Well, welcome back everyone to The Daily Show, where we talk about markets around the world together. My name's Tom, and we've been running this show for over 3+ years together. If you love markets like we do, then remember to subscribe and smash that bell icon. We'll be covering macro lead indicators and the hottest charts. It was a pretty bad day across markets, and you can see that Google was leading with a huge sell after, of course, missing earnings slightly from expectations. Then we had everything to do with the big tech, but more surprisingly, and I had to put this in at the start of today's video, was how bad regional banks were going during the session, down 5.85% throughout. And of course, we saw all the normal defensives being healthcare, utilities, and staples holding firm. This takes us to a 5-day average of utilities actually now being one of the better returns and semiconductors going from one of the best to one of the worst very, very quickly. But regional banks quickly overtook everything else in literally one session. So how bad is it? Well, today we'll be discussing some big stuff, but let's talk about the theory that we've had here this week, which is that we may see topping effects around tech earnings and the FOMC. A lot of this has to do with these kind of periods in time where you've got that buy the rumor and potentially sell the fact kind of event. And we saw a 6-month run in both circumstances, which also went for around 20%, which might be a coincidence, but it certainly is very important. We also know that we got close to that 5,000 level, which everyone would have been aiming for. So what about the data? What about the stats? Well, we've got CTAs coming up soon and dark pool liquidity, which is very interesting. But let's talk about what happens when the Qs decline over 1.5% on an FOMC decision day. Do we have some stats here? Well, thanks to Jason, we do. And it turns out that it's actually not that great for a month ahead. Now, you might say, well, Tom, it's still 53% positive. But if you know anything about markets, generally speaking, markets are a little bit more positive than 53% over a month period. So if we're getting something like this, it shows you that actually there's a little bit more bears than you would think on some of these. And some of the numbers are horrendous. Look at this, negative 27.4%, negative 21.9%, and quite a lot of big sells that actually happened over the next month, with some big points over the next 2 weeks. So we'll be watching very closely. And it really does fit in with that first quarter narrative that we've been talking about, which is where we expected the weakness. Let's talk about some good cases, some bad cases, and everything in between. Obviously, if you're a longer term investor, you're not going to necessarily be very concerned. And there is a good sign, which is excess savings. We've been talking a little bit about delinquencies and credit cards rising up, but we do still have excess savings that are above. And according to Bank of America, which we posted over on our X account, you can see here that monthly excess savings are looking still pretty healthy for the rest of 2024. So that's a good sign. We can also see here that weekly crypto asset flow went super negative straight away after being super positive. Again, that was just really being put in here to show you what a buy the rumor, sell the fact kind of event looks like. And of course, we know that puts have been very cheap recently. In fact, the cheapest they've been in a long time, according to Goldman Sachs, which is why we were due for some volatility like we're seeing over the last couple of days. So let's move over to CTAs. Now, we've long theorized if CTAs start to sell off, that could be part of a larger pullback on the markets. And of course, you can see the previous points where they've done that in the past. Well, it looks like they may have just started. And we posted this over on our X account. Again, links in the description if you're interested, saying that $7 billion of market on close sell-off did occur over the last 24 hours. Now, it's only little, but if we move underneath the 20-day moving average, this is going to be a huge deal because that often triggers CTAs to actually sell more. And it could be like kind of one of those flowing effects. So remember, the 20 is going to be a very important moving average moving forward. And we'll take a look at that soon. Conversely to that, we've also been talking a little bit about CTA positioning when it comes to the buyers. And of course, we have here Brent, which has sold off over the last 24 hours. If that does break through 78 a barrel, and just keep that in mind, it could get a little bit extreme fairly quickly. So I'm not sure that's going to happen, but definitely seeing that as a potential opportunity. And obviously, we've already been talking about how calls have been pushing up oil recently until the 78 level, which it's now reached. So a positive January, is it a good thing for the rest of the year? Yes. And that therefore should make you start to think about, well, if we do end up getting bigger pullbacks, could they be buying opportunities? Well, some stats suggest they could be. And again, it's kind of normal for markets to usually sell sometime in Feb and March during this normal year, which is an election year, or just during any type of normal year. We usually see that first quarter kind of pullback. So if it gets worse, don't be too worried. I think it's generally expected. And of course, there'll be some horrible narrative going over the top, which we'll have to try to break through together, which we'll be doing, of course, on the channel. But why could this be important? Well, you can see here that in election years in general, April is actually the most important month. And what happens there can really dictate a lot about the rest of the year. And Q3 and really Q1 are the ones you want to be watching for volatility and spikes across the board. Wayne's already done a great study that goes through that November to January run and how it ends up looking at the end of the year. And you can see that even in the negative years, they weren't that bad. So 35-2 is a great track record. And I guess you just got to keep that in the back of your mind if you're looking at markets. He's done some other analysis here, and I think this is interesting, which again shows a very positive correlation for the end of the year. And a Feb-December run would be looking at around 13-1 in terms of overall positivity, with only 87 being an outlier. But I think that was a point where we got that flash crash that obviously went through, which kind of broke the overall system. But other than the flash crash, it was still trailing at a very, very good month. Now, April will be, I think, one of the most important periods, so make sure to stick around on the channel because we'll be looking at that. But for now, what's going on around the world before we get into the key charts that really matter for the S&P and, of course, NASDAQ? Well, first up, we saw a bankruptcy recently in Chinese news, which obviously was Evergrande. And we've also seen this before with WorldCom filing for Chapter 11 back in all the way in 2002, and that being a bottoming of the market. Now, we've kind of been talking about this a little bit, and I just keep bringing it up because this is what we expected. We did this about 1.5 weeks ago. We've now seen new lows on certain funds like CQQQ. Obviously, the Hang Seng has kind of been holding in there a little bit. We're going into Chinese New Year. It's a very interesting point for Chinese stocks, and the first time we've really talked about them this closely in many, many years. So are they bottoming? It could be. Another one for Tesla fans out there is going to be that we've, of course, seen a big, brutal sell-off. Tesla needs to find some elastic demand over the next kind of like 25 days. And the reason why that is because it's always recovered. In every single previous time where it's dumped down over 5% on a 6-month low, it's recovered. It's had that elastic demand. If it doesn't this time, I think we need to be questioning whether that stock is actually going into a big decline. Let's talk earnings now. We know big earnings are coming. We've got Apple, we've got Amazon, and we've got Meta. These are all coming in less than 24 hours, and they're going to be a big deal. After the close, and expected moves are big. Meta is going to go plus minus 7 according to the options market. Amazon's going to go plus minus 6. And of course, Apple is still on a plus minus 4. So expect volatility across the board with huge moves either way. Now, what are some of the favorite trades or favorite types of things we've been looking at this week? Of course, Treasuries has been one of those, with our expectations that Treasuries had broken out being pretty fierce. And it was one of the only things up over the last 24 hours. It's now returned back to a point where I could see some take profiting and some maybe selling to come back through. So definitely be careful of that. But of course, if you're a longer term holder of Treasuries, it may be a very good year for you. Let's move over to now what we've been seeing across some of the transactions. And there's been a lot of S&P and Q transactions and all sorts of semiconductor transactions at these highs. And we haven't really seen any move from that until just recently. You can see here IVV showing a big trade the other day and then moving down. It's actually even lower now in terms of how much it ended up selling after Jerome Powell's speech spiked the market and then dropped straight after. Let's now go through the options because, of course, there was a lot of options on the markets. 43 million, 56% calls. So you can see that buy the dip is alive and well in terms of what people are trying to do on the options world. But because it's skewed so heavily in the call side, if we start to see unwind, remember this could go back to mean reversion, the weekly 20 moving average, very, very quickly. Some large transactions going on here, and you'll notice that we have a very equal S&P. In fact, it's almost equal with the puts and calls, and that's a fairly big deal. Now, overall, you can see here the Qs had way more puts, but yeah, surprising to see that the puts and calls were so even. Usually you get a little bit more puts than you do on the call side. So that is something worth noting. Let's now move over to the charts. First up, did we see central bank liquidity drop off? Not really. It's kind of remained stable. So we'll keep updating you on this if we see any changes, and of course bring them on the charts. We did see the volatility spike up, VVIX up hard, VIX itself up 7.66% to 14.34, and some pretty big moves across the board on the Qs as well. And we know that VIX was bottoming around this 12 level, but just because you see VIX here doesn't mean it's a good buy. In fact, VIX or VIXY, if you do trade it, it's one of the worst trades you can do. If you ever don't believe me on that, then just load up the VIXY and take a look at a weekly or monthly chart. You'll be horrified how much it burns your money over time. It's a very quick, very fast type of trade. Let's move over to yield. So yields fell across the board after Jerome's speech, and you can see here that US 10-year dropped into that kind of like demand zone, which also times in well with obviously where we were with treasuries. And the same thing happened across the board. Basically, the market was repricing now. No March rate cut, moving into May, and it doesn't like what it sees. And often what the market will do is the market will either preempt something like it preempted rate cuts, and then if it doesn't hear what it wants and it then deems that maybe the market will break because of that, it will sell off. So the question now is, will the market crack it and basically start to move down just because it doesn't like what Jerome Powell's saying? And possibly that would feed into what Jerome's really trying to do here, and I think it would. So you can see this is a big level for treasuries, worthy of setting an alert above here to see further breakouts. Obviously, that's going to mean yields going down across the board on the 20. And if you notice, US 20-year is actually a bit weaker than US 10-year, showing that the economy is starting to, or at least the market's starting to think that the economy is maybe faltering a little bit. So treasuries, very, very good. Then we move over to bonds. Now, the bond indicator freaked out big time and sold off. Not a great sign. And of course, if we get a new low on this, then that's kind of preempting that the rest of the market is needing to go back to these dates as well. Now, if you look here on the dates, that's the 3rd of Jan. And we'll bring that up when we look at the S&P 500 later on because it will be important. Home builders still looks like a Wyckoff distribution. Dow Jones Transportation Average looks pretty bad after that session, obviously selling off quite aggressively. And of course, we saw copper get back up to our key zone of just under 4 and unable to breach it. Still looking for copper to do that. And, you know, I think it could do it even though everything else looks pretty bad, but that's still not a great rejection on the weekly if it stands like this. This is where a seller is going to be. And obviously we're looking for a breach through of that to really get minerals, metals, all of those types of things going to the upside. Dollar index held firm. Now, I think this is going to be a non-farm payroll style move. And I would prefer that with the dollar index, it spikes a 103.80, 104, which we've talked about a lot, and then possibly does a sell-off. You can see it's really accumulating here. So I think either one of these scenarios is the most likely during the non-farm payrolls, going off in one direction and then splitting to the opposite. Gold ended up reaching first target, which is at 2055, 2060 zone. So it actually rallied up during the event and then it sold back off. But it still does look overall positive, even with these horrendous wick rejections, which do show that people aren't super keen on holding it for very long. US oil, now this looks kind of bad. Whether it's a sell or not, we'll have to find out. But usually speaking, this was a huge level, $78. We knew that. If, of course, we ever breach past 79, I think it opens up the 82 to 84 a barrel, which we've talked about for a while. But I would say that we saw weakness signs in the previous session. If you did sell here, that's pretty nice, actually. It's a good-looking trade. It's part of our day trading masterclass as well, that type of setup. So very nice setup at a very nice zone. And it should be broken even at this point or some take profit off the table. But in general, this is actually a little bit weak. So oil looking weak for the first time in a while, and we've obviously been big bulls on it. So to see these types of rejections, not really the best thing. But if it does get through 79, you know, all bets are off. 82, 84 would be the next target. Now it's time for Apple earnings, and I thought we'd bring it back on the charts. Now I haven't changed anything from this from where we had it about a week ago, but you can see that we had this watch this zone for bears. You can see how it kind of priced in with a weekly rejection wick, what we know as a pin bar or a shooting star. And then we've got this big red kind of going through right now. Now, this kind of points towards swing traders getting inside it. So 178 is a big traded zone. That's going to be an interesting level if we get to it after earnings and how it reacts to that. So I would kind of expect with a plus minus 4%, and let's just measure this out. So -4 would get us to around just underneath that. Interesting level to see whether there's a buy spike. Now, +4 would just take us back up to this bear area where we've seen previous selling. So an interesting point. Markets love to do this. The options market, I would say, is relatively correct about the expected move. And overall, if it does fall under here and fails to find buyers, we could be moving to 168 very quickly, which would get us into mean reversion territory. So look, it's not the best looking chart, hasn't been for a while. Tesla continues to sell off. I kind of expect it to do this. I wouldn't mind it to make a new low, even fill the gap that's down here somewhere. That one, the infamous gap on this channel. A lot of people gave me a lot of crap about that one. And then, of course, we could be moving up and out. And we do need that if you're a Tesla buyer or bull. You really need this thing to show elastic demand buying. So at this stage, still down, nothing much to go with. Microsoft did fall off, obviously not looking too good on the charts. So that's kind of, not super promising, but I love this stock and obviously it still looks really, really good. But from a weekly perspective, that's not fantastic. And the reason I've got it on the weekly is because we're open to a lot of sells back into where we were a few weeks ago, with that now being where mean reversion is, where the 20 moving average is. So this is open on a lot of positions. So let me explain why. Let's have a look at semiconductors. Now, semiconductors were one of the weaker markets that we started to see last week. In fact, it was the early warning sign. And some people, spotted it. Some people didn't really like it. Whatever. We saw that the flag obviously pushed into this TP zone. And of course, we had the gap up, gap down, and we've seen some weakness from that point. Now, the problem is if we think about it, to get back to mean reversion for semiconductors, so again, pushing down, that's going to need a fairly decent sell on it. In fact, it's about 10% down from where it is right now. So what do you think in the comments down below? Is that possible right now? Is that what you think is going to happen? Because really the first point of call is this. And with the weekly looking like that, and possibly a new weekly with a red, depending on what happens, it's kind of signaling that that could be on the cards. What do you think? I mean, some big breaks did occur across quite a lot of the markets. Now over to KWEB, which is just the Chinese market for internet ETF in America, one of the popular ones. You can see here the daily 20 is still being held down. And again, it could be holding a base around that point. It's not going to really care about the US market too much. Already selling between 75 and 90% across many of their tech stocks. Let's move over to the US 2K. Now, this was the one that kind of signaled towards a buy end, and obviously it went underneath. I still don't think it's low enough. It probably needs to be into the 1930 level overall. But yeah, this is a pretty big sell-off after giving what you would usually say is a relatively good, stats in your favor type of buy, and it's sold. So if we have a look at this on a weekly, let's check it out to see what it might close as. If it did close red like this, it's a bad sign for it. So I think the weekly close is going to be another clue as to how much more we could get sold off or bought up on markets. So certainly watching that on the US 2K. The Qs, island reversal, not great. Daily 20 moving average, obviously usually seen as a support level. And you can see here on the futures market that it's rallying a little bit off this zone. But it breached underneath 17,288, which now exposes, some other key levels, such as the one we've already got highlighted down here. Now, this is actually still many percentage points away, about 3% away from where it currently trades. And the US 500, now this is the one, this is a big level here. It came down to the zone we spoke about. It rallied up during Jerome. It got back into the supply, which is here, which if you had bought in here and you were rallying it in, this would have been a good BE or even start scaling off kind of level. And then Jerome pushed it right down. And it came into probably the most important little swing trading area. So this is a big zone for the S&P. If we do manage to get underneath this magical 20 moving average, that's going to be a huge deal for CTAs, which could start to sell in a big way. We've already seen some selling. And think about how much we've put on. We've only seen pullbacks in time, which is this. We've never seen a pullback itself. So a 20 moving average breach is going to be the biggest deal. That sits at the moment at around 4827. So if we get a close under this low, a close under the 20, rallies at that point should be met by sell demand, and we should be moving down to, you would think, around 4700. if not even possibly back into the 45, 50s. So these two levels becoming the next big buy the dip style scenarios that people will be looking at. A very important zone though, day traders are going to be looking very closely at the way that it reacts to this area. And I'd be looking for a bit more structure. Something like this would be a pretty interesting buy. So obviously day trading will be liking this as a potential buy zone after that big sell. They're going to be looking for the signals though, and I'm sure many of you out there know what to do. Let's talk about Bitcoin now. Bitcoin sold, and we talked about this being a 5-minute, 15-minute sell-off. I still think that it was, and obviously we came up and tested that level again, which would have been a bit frustrating if you'd broken even your good entry, because you would have been broken even, which would have sucked. But yeah, look, it's still selling. No swing trader really cares about it yet, because we're not underneath this level here, which we've got an alert for, which sits around 41,400. So look, Bitcoin could be weakening a little bit. It's still in an overall upward trend on the higher timeframes, but again, 15-minute, 1 hour, 5-minute, all those timeframes, they're still looking quite weak. And Bitcoin, if it breaks under, could be looking at further sells. Do remember there's still big news coming this week. So even though we've seen everything to do with the FOMC, we have non-farm payrolls, the jobs numbers, how bad's unemployment getting, have the Fed made a mistake, will the market crack it because they need a rate cut faster to help support the economy? My guess is probably because the market loves to complain and get what it wants from the Fed. And of course, the big issue in the day and age that we have right now is the Fed kind of tells us what we should be doing. Instead, imagine if they didn't tell you anything at all, and they just said, we're not going to do press conferences anymore. That would make for a volatile market and actually a very interesting time for day traders and swing traders. If you are interested as well, our free weekly newsletter is coming back. I'm sorry we didn't manage to get one out in Jan, and that's just because of some family commitments that I had to do. But don't worry, it's coming back each and every week. So totally free weekly newsletter. Links in the description down below, and we'll send it out and you can sign up so quickly. So thank you very much for watching, and we'll see you in the next video. Good luck out there, guys. Bye for now.